Alright traders, I'm back again with another video. This is going to be a quick video, market recap and live trade that I'm in. We're going to recap some of the things we talked about on our past video, and then we'll be back at the end of the week for a market outlook again, Ichimoku outlook. So here's our Ichimoku recap based off of some of the things that we talked about last time. The New Zealand dollar yen here is a live trade that I'm in right now, and you can see the market was pushing upwards and the market broke the Kumo cloud. You could have got in on a breakout here, but the market retraced. So the market giving me a better chance, a better level to get into exactly. So you could have got in on the bounce down here. Now we didn't bounce all the way down to the cloud, so it didn't pull back as far as we wanted it to. So we waited for the break of this most relevant open and the previous most relevant open, and it broke above that level. We could have put our entry order in here, but I wanted to see what was going to happen at this level here. So I put an entry order in here and I put my stop loss down here at this fractal level. That's a 70 pip stop loss. That's a nice size stop loss, but had you taken the breakout, you would have had to put your stop loss down here or even lower at the Kijinsen. So down here would have been an even bigger stop loss. And you know, some trades you're not going to be able to take. It's going to be based off your money management, so you have to decide. This is about 119 pip stop loss if you take the breakout of the cloud. So waiting and being patient, you get a better feel. Even if the cloud breaks out and then the market's going to eventually pull back, then you try to get in on the pullback. All right, and a lot of times it'll pull back to the level where it broke out, because that's going to see it's forming that support and resistance level here, and there it is. The market pulls back, goes up, breaks this level, breaks this fractal level, and pulls back to this level. Now this fractal level becomes a support level. The market pulls back, you could get into the trade there. It broke it and pulled back to it. You could have had your entry order in right there, but that's where my fill was. I got filled there, and I had my stop loss right here. So I got a 70 pip stop loss, 240 pip profit. That's roughly 3-to-1 ratio. That's really good if that works out in my favor. If not, I'm not going to take a loss. I'm not going to allow this to pull back to zero on me. I'm going to get something out of this trade, and then I'll have to wait and see what the market does. Okay, so that's New Zealand dollar yen. Euro Aussie, looking at the Euro Aussie 4-hour time frame, you can see the market in a downtrend. We're below the cloud, so we know we want to look for shorting opportunities. The market was pulling back. I think we were here on this last candle right here, previous with the Ichimoku outlook, somewhere around there. We were close in this area. Well, anyway, you see this long pip candle right here that the market developed. All right, so this candle wick is more than 3 times the length of the body. So more than 3 times the length of the body. That's one of the things that we like. And also, there's no relevant price action within this area next on the left of the candle here. So that's very important too. That's very nice. And then finally, we're at a support and resistance level. That's a level we want to be at. And where do we find that level? 2 areas. One is the 50% retracement level of the Fibonacci retracements, and that lines right up with this Kijinsen right here, which is usually going to be your 50% retracement level, where that lines up also. So that lines up together. We had that level hold as resistance. The market pushed all the way up to the 61.8 level, a little bit past that, and then pulled back down. Once we broke this this candle here, the low of the candle here, we could enter our trade here. Now some people want to wait for the break of the Kijinsen, get back on the other side of the Kijinsen, and you got way in down here, and it would have been no use taking a trade, because you're going to look at this level right here. This is the level that you're going to want to take profit, because that was our support level. Now we want to see if the market could break that level. So now what we can wait for, we know we're in a downtrend and we know we're below the cloud, so we want to look for shorting opportunities. If the market goes down and breaks this level, we look for a pullback to that level, just like we did on the New Zealand dollar yen. All right, so this is the level where you wanted to get into this trade, and that would have been a nice trade all the way down to here, and it went exactly the way it should have went. Pound Aussie, same thing, exact same thing as the Euro Aussie. Pull back to the 50% retracement level. This candle didn't wick all the way up to the 61.8 level, but you got that 50% retracement level hitting, and that's where we were looking to get in the trade. We come here, the candle close, you get a close right here below this candle, below that long wick candle, and here's where we're in the market, and you ride that down to here. Your stop loss would have been a little above that wick, and that's not too far of a stop loss. That's nice risk reward ratio. All right, so now we're going to wait. We're going to see what the market does. We're below the cloud, so we know we want to look for shorting opportunities. If the market breaks through this level here at the roughly between this, I'm looking at this level right here. If we get a close below this level right there, the 1.163 level, if we get a close below that level, then maybe we could get into the market, but I would more like wait for the market to retrace back to that level. So the retracement level that I would look for the market to come back to, once the market closed below this 181.63 level, I would wait for a pullback and try to get it at this level, at the 1.8125 level. All right, and have my stop loss up above these candles here. All right, and so then maybe you get a feel here, because a lot of times the market will pull right back to this level, but a lot of times it pulls back to where the wicks were located, not to the bodies. All right, so sometime it does. So here's the body level and here's the wick level. This is where I would look for the pullback once the market closes below this level and try to come back at this level. Now also you can see this level holding that support. So what may happen is the market may bounce here, then bounce again, and then take off and move forward upwards. All right, so that's pound Aussie. Euro yen looks like the same thing we saw on the New Zealand dollar yen, the trade that I'm in. The market had to break out of the clouds. You can see the same thing happens with the market all the time. Does the same thing all the time. You see these formations develop. Market hits the resistance level, pulls back, and then we break this relevant open right here. And you have your entry order in here. Here's your stop loss again. Had you got in on the breakout of the cloud, look how far your stop loss would have been. So if you wait, be more patient, get the pullback. Here's your pullback. You pull back, you can tell that you got the pullback because you got the fractal level development here after this close of this candle here, and you want to get above this level here. So you put your entry order in here once the market moved downwards. Here's your entry order on this previous week's high level, and that's holding at that level's at roughly 139.61. All right, so we had our entry order in there. The market takes off. What does it do? Comes back, gives you a second chance, and then it's moving up again. All right, so you see where that market goes. You got a small stop loss, but a lot of areas for profit target. Here's one of your levels. That's going to be a level. That's a support and resistance level that we have at the 140.91, and then finally 42.90 will be the next level. All right, so let's go to the Aussie dollar 4-hour time frame. Same thing. Market does the same thing. It's just not a breakout of the cloud here. It's the market moving upwards, but then you get the pullback, and then we got this level here. The market breaks that level. What does it do? Comes right back to that level. Gives you another chance to get in. So you missed this, but the market gives you another chance to get in. You get in, and then here's your target level right here, right now. This market's been moving upwards for a little while, so you'll have a double top at that level, and that's a strong level of, maybe a strong level of resistance, and the market may fall down a little bit before breaking through that level, or it may just drop down wherever. All right, so now this trade, there's nothing here, but the market's done the same thing over and over. Pulled back to the Kijinsen right here. Would have been a real great trade. Get in off this level right here. Here's the level you want to get in, the most relevant open right here. The market closed and shot right through there. Look where your stop loss would have been. Here's your entry order right here, and your target way up here. You have to be able to see these things. You can see this because there's 3 candles prior to that, and it made the fractal level. So here's 1, 2, 3 candles before it even breaks this level. This is the level that you know you want to shoot for, this most relevant open right here. So we start making a higher close. All right, we closed higher, we closed a tiny bit higher, but then finally we close way higher. Okay, so we have some strong momentum there, but that trade's gone, and you missed the second opportunity there. So I would wait on this trade. We're too close to the resistance level. Wait, there's nothing here right now. Now if the market does pull back to this level, there may be a trade here. All right, if it pulls back to this level again, give you another opportunity, then I would shoot for this level again. All right, so let's go to the Aussie New Zealand dollar, and this thing here is you can see the market moving upwards. So we're in an uptrend. We're a little bit above the cloud. Now we're inside the cloud with this candle here, but the market bounced off of the cloud here. So the cloud was holding that support level here, and the market rode it right up. Okay, so here's that most relevant open right here. We wait to get above that level. This candle closed above that level, here's your stop loss at this fractal level, and that fractal level lines up with the previous week's low, so that's a strong support level. And the market moves up, breaks the Kijinsen, and now the Kijinsen is holding that support level for this market, and hopefully that stays that way. The market will move up. Still, this level is a good level to enter the market and put a stop loss below this fractal here. You got this support here, you put an entry order a little above this cloud here, and then ride this to this level, and then quite possibly this level here. So you put an entry order in here, stop loss down here, not much risk, but look at your reward is a little more than your risk, so that'd be a nice trade there. So that's still that's still a possible trade right now. That's something I would be looking at. All right, but I'm in this New Zealand dollar yen trade, so I want to wait that out. Now here's another thing. The market pulled down. Here's where we were earlier this week when we did the outlook, and we were right here somewhere in this area. Well, the market went all the way back up, went above that level. We didn't want to go long because we're below the cloud, so we had to wait, see what happens. We thought this would be a strong support and resistance level, and this whole level is the zone, is the support and resistance level. So this is a move up and then a move back down, faked out and then back down. People who aren't following the Ichimoku system would have taken this trade, and then they would have got stopped out as the market moves back down. And now we're at this fractal level. The market closed below that level. There's a couple opportunities to get in the market here. You could have got in on the close of this candle because we broke through and put your stop loss a little above this zone here. You could have put it at the top of the zone. The top of the zone is the farthest I would have went, a little bit above that level. Or else you could put it at the Kijinsen here. Alright, now you can wait also to see if the market pulls back and touches that level, anywhere in that level. If we go a little above this zone, put your entry order in down here and let the market ride down to here, and then see what happens at this level down here at the what's this level, roughly 1.0966. Alright, so that's US dollar CAD. I don't like how this dollar CAD spikes so much. I don't really mess with it a lot. And the Aussie yen looks just like the other pairs I showed you. You have a break, pull back, another break, hit this resistance level, pulls back. We broke the most relevant high open. We broke this most relevant open with this candle here, so we have our entry order in here. We know we want our order in here on this candle. Once we have the fractal level, we assume the fractal level, this is going to hold right here with the fractal level, and that's going to form that support level down here with a fractal. So we know we could put an entry order in here and then ride the market up. Now you may have let this resistance level hinder you from making a trade, but we hit that level once, bounced off of that level. Now we're attacking that level again because we got the pullback. Now we're building up strength to get through that level. We're above the cloud. We want to be going long. So that would have been our entry order, and our sacrifice, our risk would have been right down here. Alright, and your target on this trade, all the way up here. Alright, now you have to take levels, okay? So the first area that I would have looked at this target would have been right here, and that's where the market is right now. So I'm going to the most previous support and resistance level for a target, and then go to finally this would be the top target. Alright, so that's it with Aussie yen. Quick recap on that. And one more trade, the last thing I really want to look at, that Aussie CAD. I told you how strong this support and resistance level was, because I think we were about here. We were here finally, had this long wick candle when we did the outlook update last week, and this candle we could see this strong support and resistance level. So this was strong resistance. Here it was resistance here, strong. Then finally the market broke, came back down, strong support. Look how many times it's hitting this level. So we knew this was a strong support level. And what I did here, after this, I put an entry order in right here, let the market close above, and I rode it right to here. Took me out. I left my entry order in. I left my target right there, and I didn't move it anymore because I was looking at this double top, expecting the market to move back down. Well, the market moved out, went a little higher, but finally came back. So I got out of there with 120 pips. Alright, and now I'm in this New Zealand dollar yen We're going to watch this. It's down to 41 pips, but I'm going to let it ride and we'll see what happens. Hopefully it doesn't test me and pull all the way back to this level, start breaking out and taking off in my direction. All right, but that's the recap that we want to do real quick so you guys can see what's going on here in the market. So I'm going to close out and I'll be back again with the outlook for next week at the end of the week. I hope you guys are doing well and God bless. So long.